Sanjay Dutt, Director at Quantum Securities, joins in on the show. Sanjay, hi, morning. The GAAR deferral, and is that enough to bring the FIIs back into the market?
I don't think so. I think it's a good beginning, at least a sign that, government is open to suggestions and corrections on things that do not fit into the global framework or investments or encourage investments in India. But at the same time, I think there's lots more to be done by the government on the macro side, on the specific policies that are pending. But I think it's a good beginning. At least we've got some movement coming in. The minor irritants that were there in the finance bill have been addressed.
India Bull Finance is off to a good start. It is up 4.5 rupees. That's about 2% up. Flip it around and you will see the volume activity is also looking quite charged up. 222 rupees now for India Bull Finance. So Sanjay, what's been your portfolio strategy of late? Where are you putting your money to work?
We're basically putting our money to work, as I spoke to you last time, Nikunj, in beaten down stocks, which from a 12-18 months perspective look good to us. Staying away from the traditional defensives that have been outperforming over the last 12 months, because in our opinion, those are over-owned and that's a crowded trade at this point of time. I think it's a good time to move into the interest rate sensitives, particularly banking, which has really been hit hard in the last month or so. They look pretty attractive to us, and I think the negativity in terms of NPAs, etc., has been overdone to an extent. And similarly, some of the infrastructure and some of the large cap names look pretty good at this point of time from a 12 to 18 months perspective. I can't say what's going to happen in the next 2 to 6 weeks, but from a longer time span, I think things are very good at this point of time to put money into the market.
So Sanjay, what's the call on the market momentum right now? Do you think the GAAR deferral is going to instill a rally in the market, as was the case yesterday? Or do you think we're going to be back to consolidation above 5,100 or so?
I think the latter is more likely because we don't see the 5150, 5180 level being broken that soon, because that's a very key level where we found support many times. So therefore it turns into a major resistance. I think it's going to be a struggle crossing this, so therefore a good amount of consolidation may happen here unless some other triggers within India or overseas come in and which substantially increase the liquidity flows into the market, and the selling as well as the resistance that is there at these levels is absorbed.
Sanjay, over the years I've known you, you've identified not one or two but nearly 24 multi-bagger stocks, and I would like to point out this for our viewers, Sanjay, that had identified Unitech at 2 rupees, BML at 40-50 rupees, Kotak Mahindra Bank in 2002 at 50-60 rupees. So Sanjay, which are the next multi-baggers you're betting on? Let's talk names here.
Nikunj, I wouldn't want to get into names at this point of time, but I can tell you that there are an extremely large number of good quality large cap as well as mid cap, small cap companies with excellent managements, good business models. I can name a list of at least 20 to 30 stocks that can 3x to 5x in the next year or so and are being totally ignored by the market. These are across sectors in financial services, in capital goods, in infrastructure, which are actually trading very cheap at this point of time. There are quite a few companies in the auto ancillary space, also the auto subsidiary space, which merit attention at this point of time. Clean balance sheets, no debt, market caps in the range of about $60–70 million. That's all. Largest suppliers of components to all the motor vehicles and cars, the foreign companies. So I think one can get the drift as to what I'm hinting at, what I'm saying. I don't want to get into individual names, but some amount of work that needs to be done by investors, and investors need patience. The biggest problem that we face today is investors want to look at the market on a day-to-day basis, on a week-on-week basis, and then suddenly worry about 5,100 toot jayega and 5,000, and then next level is 5,200, up 200-day moving average toot gaya. I think investors don't need to get into that on a daily basis, on a weekly basis. They just need to get their investment ideas correct and just hang in there for a reasonably long period of time.
So, are you fully invested in your portfolio, or are you still sitting on some gunpowder which you want to utilize as markets, if markets will drift lower?
No, Nikunj, I'm fully invested at this point of time. between Friday and yesterday, I took more positions, and I don't think that anything lower would be seen in FY12. I don't see 4950, 4980 and the indices being broken. But like I said, those levels are just levels, are irrelevant to me. I'm looking at individual stocks, I'm looking at individual opportunities which come along with the indices collapsing because everyone gets into a nervous and panic mode. That's the time to accumulate good quality stocks. I'm fully invested at this point of time to really answer your question, and I don't have any cash levels, very minuscule cash levels which I keep, and I'm fully invested.
So is your investment portfolio largely mid-cap centric, or would it be dominated by the frontline names?
Aisha, my portfolio at this point of time is tactically positioned in about 30 to 40% good quality large caps, which I would exit with a 20% odd pop in the next few months, and the rest 70 odd percent is into mid caps and small caps. The tactical positioning is primarily because I see a good rebound coming in the near future in the large cap universe, taking the indices at least 10 to 20% higher over the next 9 to 12 months. And my premise is based on the fact that whenever the central banker is on the side of liquidity and easing, equities are the ones which outperform. And this is the time to reallocate out of debt, out of gold, out of fixed income, and be a little leveraged towards equity.
Sanjay, so over the years I've known you, you've always been a realistic person, but right now you're sounding extremely bullish to me. What really could challenge your conviction?
I think the only thing that could challenge my conviction is my head being handed over to me, because I'm fully invested and the market collapses from the 4960, 4970 level and trades below that for a few days. That's the only thing that will challenge my conviction and nothing else, because I think the market has been hit with, I can't think of any more negative news you could hit the market with, starting with political uncertainty, to budget problems, to Europe, to US, to job numbers. Name it, any variable, and the market has been hit by that. So if I see the market trading below 5,000 for a reasonably long period of time, that's the time I would, my conviction would be challenged, and I would like to cut my losses and run.
So we are at 5,100, Sanjay, which means 5,000 is not far away.
Yeah, that's what I'm saying, Dikuj. I think trading below 4980, 4970, like I said, for a few days, for about a week or 10 days, is going to surely challenge my conviction and is going to tell me that I'm wrong, because I believe that price action is supreme. Once prices tell you, what it is, the reality is definitely hidden somewhere in there, and the news flow comes in later. So prices always tell you in advance as to what is plaguing the markets, and vice versa. Prices run up much ahead of the event when there is a positive event in the pipeline. So therefore, like they say in Hindi, the famous Dalal Street Kahawat, Bhav Bhagwan. So therefore, that is what one needs to look at. Look at the screen. The screen tells you everything as to what's going wrong or what's right at the market.
Friend is always your friend, isn't it? So Sanjay, in the event if market trades below 49, for 4970, 4980, what will be your portfolio strategy? Would you start selling your mid-cap stocks? Would you start selling your delivery-based stocks? Would you start selling the large-cap stocks you own?
I think my tactical position is what I would get out of, so which means I would get into about 30-40% cash, because that's the position I would be worried about. Mid caps, small caps, unfortunately, I know I'll not be able to sell them because liquidity tends to vanish, and you're not able to really sell stuff when market gets into a phase of extreme bearishness or prolonged bearishness, because then liquidity in the mid cap and small cap universe totally vanishes, and reasonably large size positions, investment positions cannot be liquidated without substantial loss being incurred in terms of price. So therefore, I would liquidate my large cap positions, large cap liquid positions, and sit tight.
Sanjay, you just talked about staying away from defensives. Would that list of the avoids at the moment also include the richly valued consumption names, the likes of a Titan, a VIP, or for that matter, Jubilant Foodworks as well? Or do you think it is growth which wins over valuations at this point in time for these names?
I think growth is always the price. I'm not the one who chases price just because there is growth, and I'll buy anything because there is growth. I always look at levels to buy. I tend to be a deep value investor. I tend to be a contrarian investor. Yes, I get it wrong. I've sat on a large number of stock positions which have remained deep value and got into deeper value, and I've lost money on them. But I very rarely chase, the high-flying names that are the flavor of the season, and because they tend to get overowned, and when they correct aggressively, you don't know what levels to exit them at. So therefore, I normally don't tend to get into those names which are in the fancy or which are overowned. And at this point of time, I think the defensives are overowned. Given the RBI policy and given the macro framework is going to change over the next few months, I think it's time to take contrarian calls.
What are your thoughts on global commodities, Sanjay? Just about everyone on the street is of the view that in the near term, global commodity stocks, given what is happening in the global environment, they will underperform.
That's correct, Nikunj. I think the commodity space is in a corrections phase. I'm not saying the commodities in the long term are a story that's done with and over. I think commodities will continue to outperform a lot of other asset classes. But at least in the short term, that's about a year or 2 or 6 months ahead, commodity space is going to remain weak, which is another reason why I'm bullish on equities in India, because that's a pro-inflation stand when commodities tend to turn weak for India, because we are the largest consumer of commodities and inflation has been plaguing us a lot. That's another reason why I'm bullish on equities and bearish on some of the commodity names as well as commodities specifically. I don't want to directly take positions in them.
Sanjay, ADAG stocks, I guess it's a situation of glass half full and glass half empty. Glass half full because they are up about 30 to 40% from the December lows. Glass half empty because they are down about 20% to 25% from the recent highs. Tactically, how are you positioned there?
I think I like the group. I like the group as a whole, because over the last few years, a lot of hardcore effort and work has been done in the companies, whether it's Reliance Communications, Reliance Infrastructure. They have done work on the ground. They are positioned to benefit from the uptake that will come in the industry they are in. And I think Reliance Communications looks pretty good at the current levels. They've started to set things right. Debt would be sorted out, I know. Similarly, Reliance Infrastructure is very well positioned to do a lot of contracts and work ahead. I don't see any reason why you will not see outperformance in them in the next year or so. They have been beaten down because of sentiment and negative views people have had, which I think to some extent turn out to be biased and turn out to be some kind of a generalization at times. So I'm pretty bullish on the group. I've obviously got long positions in there, and I think the group would give good returns in the years ahead. So
let me blend 2 questions into one. Which is, to your mind, the strongest ADAG group stock? And B, last time when you were with us on this forum, you had recommended our viewers to buy JP Associates. Do you still own it? And at these levels, how's JP looking?
I don't own it, Nikunj, but I think the stock looks good. It's positioned pretty well. Debt needs to be sorted out, which would be sorted out. It's not the only company which is plagued with the balance sheet issue and, debt and the relevant issues related to large amount of debts they have and projects going slow, etc., etc. I think those things would be sorted out with time. Amongst the ADAG stocks, I like Reliance Communications, like I mentioned. But my top pick would be Reliance Capital, because, I'm bullish on financial services in the next year or 2, given that it's the best diversified financial services play in the country with asset management, insurance, commercial finance, everything built into one, and valued at just about $1 billion, $1.5 billion. I think there's tremendous potential in the stock. And what I like the most about it, it's one of the only stocks amongst the Reliance group, that's ADAG as well as Reliance Industries, which has no, or in fact negligible government policy intervention, where others are quite dependent on how the policy framework pans out, whether it's contracts, whether it's D6, KG Basin, or whether it's, the communication sector, the telecom policies, etc. Where Reliance Capital is not impacted by anything that concerns policy decisions or government guidelines, etc. So I think that's best positioned at this point of time.
Right. Sanjay, with the health warning and with the disclosure that you have ownership in it, let's wrap up this discussion with a non-Nifty 50 idea.
Nikunj, I wouldn't want to get into something really that specific. The reason why I obviously had a specific discussion on ADAG is because I've disclosed much earlier on various programs that I have positions in there, and they're large cap liquid stocks, so I really can't, my views can't really influence price action or anything. But I can only say that in the non-Nifty, in the smaller cap situations, mid cap, small cap situations, one should look at some of the sectors in the financial services as well as infrastructure. I think there's tremendous potential in them. And there are a large number of companies which trade sub $100 million, $150 million with clean balance sheets that can be invested into.